Welcome Investorholics to another exciting ETF Spotlight review. Hang around, this one's going to be a great little ride. Today we'll be looking at ATEC, which is a BetaShares S&P ASX Australian Technology ETF. So as we all know, the pace of technology and innovation is speeding up with the rise of deep learning machines, and eventually true artificial intelligence will be upon us. And I think the speed of this innovation will only increase. So with ATEC, you can invest in a diversified portfolio of Australia's leading ASX-listed technology companies in a single trade. As with all these ETFs, you get the basket all at once. So if we're looking for capital appreciation, this is, this one's designed for capital appreciation, aims to provide long-term capital growth potential as a primary driver for returns. As with all ETFs, we're looking for diversification. So the fund can be used to introduce regional, sector or asset class diversification to your portfolio. Think just with what's happening with our COVID lockdown and the quickening of the pace of just people taking up technology in their lives. I think we've condensed that period of 5 to 10 years of take up, like lots of people working from home and people are shopping online a lot more now. I think we've condensed that period now because everyone's stuck at home. Bosses are more likely to let you work from home now, and that means that we're going to need a lot more tech and tech-based companies to support all that, and a lot more artificial intelligence and that type of stuff. So definitely for those investors that are looking for a front row seat to be in the game at the beginning, I think this is definitely something to look at. So hang around, we'll barrel through this and get you to the end as quick as you can so that you can go out and do some more research. Well, hello there Investorholics, this is Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your own personal finances, expand your investment horizons and crack your financial sky. Okay, so let's dive on into it. Investment objective. ATEC aims to track the performance of the S&P ASX All Technology Index before the fees and expenses, the usual disclaimer. The S&P ASX All Technology Index is designed to capture companies that are yet to qualify for the S&P ASX 300 and they're from industry segments outside the existing information technology sector as defined by GICS, the Global Industry Classification Standards. So why would we bother with this one? So it gives you exposure to the dynamic Australian tech sector. So ATEC provides diversified exposure to the innovative companies leading Australia's fast-growing technology sector, including WiseTech Global, REA Group, Xero, Afterpay, Carsales.com, and more. So, portfolio diversification, an allocation to ATEC can provide diversification benefits with portfolios with a heavy weighting to large cap financials and resources, which is pretty typical in Australia. So we're going to get some exposure to another sector of the market. Cost effective, management costs are low with ETFs typically. This one's sort of in the middle range, I suppose, and it's not actively managed, so the fees are much lower than actively managed ETFs or funds. So we have a net asset value of $18.27, trading at a little bit of a discount, I should say, at $18 there. So it might be worth having a bit of a look to see if it's still trading at a discount more a few days at a time. Might be worth buying at this point if you're interested in this ETF. Market capitalization of $75,600,000, so it's still a relatively small ETF. Management cost, as I mentioned before, is reasonable, I suppose, at 0.48%. There is a dividend, and that's annually, gets paid in July. I calculated the dividend yield at 1.54%. That's just pretty rough. So, tech shares are once again dominating the financial headlines, with many listed tech companies trading at or near their highs. From the lows in March, ATEC has risen over 62%, but the fate of Afterpay and Xero will ultimately dictate the performance of ATEC in the future. The very short track record of this ETF needs to be considered before making an investment decision. Many companies, you could see their share price run up far from here. I think, just in general, especially in the tech space. So the massive growth we are witnessing in the technology sector isn't anything new. The trading has already, this type of trading has already been well established back in the 80s and also late 90s, I should say. I suppose one thing that everyone thinks about is, will there be another .com bubble and boom and bust, that type of thing. Though it's sort of, 20 years ago, 18, 19, 20 years ago, it's still a bit of a shadow, and it still scares some investors away from investing in technology, even today. So from the lows in March, we look at Afterpay's up over 788%, or rough enough, and you're also seeing gains in Xero of over 65%. And the thing you've got to take into account is these two companies actually contribute about 28% of the entire value of the ETF. So this ETF is quite concentrated, even though it has 50 companies in the index, or including the ETF, I should say. There's still quite a high concentration. So we'll look at the slide over and just sort of run you through the top 10, and it's quite concentrated. So just these two companies alone can make a difference for ATEC. It's actually made the performance actually look pretty good, pretty outstanding actually. It may be too early to predict where the ETF might fall or rise to, so it's just definitely something to keep an eye on. As I kind of pointed out there, it's a very short track record, and that's definitely something that needs to be taken into consideration. Also have a look at FANG in Asia. Done a little video on FANG before. I'll chuck a card up in the right hand corner there so you can quite easily find that one. So as we mentioned, the top 10 is quite concentrated. So looking at 40 odd percent or over 40 odd percent there, just in the top 10. Since inception, we've seen a 23% performance, so we're up 23.77% since inception. Pretty good performance over the last 3 months, up 25%, a bit over 25%. Let's have a look here at the top 5: Afterpay, Xero, Seek, Computershares, REA. The rest here we're looking at NextDC, Car Sales, Altium, Appen, and WiseTech. So just so everyone knows, I actually physically own Afterpay, REA, and Car Sales. So I've owned those companies for quite a long time. I think they're actually quite well-run companies, especially REA and Car Sales. So quite strong companies. Afterpay, as we all know, it's been shooting the lights out lately, so I think it's still got a long way to run to prove itself. But I mean, if you don't want to buy the ETF, you know, you could just go and invest in the top 5, or pick your 2 or 3 favorites out of the top 10 and go and invest in those, you know. Also, if you're really interested in doing something like that, have a look at Altium and Appen, because they're quite good companies. To be honest, I don't believe that this is another .com bubble. I think that the big gains we're witnessing in the technology sector today are far different from what we saw in the late 90s and the 80s. There is a speculation, and you know, there's always speculation in the market, don't get me wrong, and there are definitely some tech companies that are overvalued and quite possibly will blow up in time. Like the majority of the stock market, you're going to see a lot of companies come and go, and that's just part and parcel of you know, the economy of the world effectively. So not every company is going to win. So you just have to make sure that you're watching those companies, and if they're going bad, you're getting out of those and making sure you're staying in the good companies. So you know, you're looking for the Apples and the Microsofts and all those type of companies that are actually going to survive. So yeah, I think that technology shares are a great place to invest some of your money for the longer term. So you're looking to put a smaller percentage into these companies, because, like as I just sort of said, they are high risk. So you're looking for these. That's something you've got to understand when you're investing in this space. This is high risk compared to some of these other companies like Wesfarmers or whatever. There's a lot more risk inherent in investing in technology companies that are fast growing and smaller companies working in areas that aren't proven as well. So I think there are some immediate tailwinds. Some definitely things that are pushing these tech companies, or as I sort of said before, shortening the time that's actually going to take for people to adopt more technology in their life. And as we're sort of all locked down, for COVID-19 or whatever, people are having to make changes in their life and effectively live differently. So the lockdown measures are sort of seeing millions, if not billions, of people turning to, as I said, sort of working at home, shopping from home, and socialising from home, even on doing Zoom conferencing, talking to friends, and using WhatsApp video or Facebook Messenger and all that type of shit. So as we've all witnessed over the past decades, I think that, as I said, the pace of technological innovation and change is speeding up. And you're going to see the rise of things like deep learning machines and eventually true artificial intelligence. And the speed of those type of innovations and leaps in that technology, I think, will only increase with computing power and the learning, machine learning. So the reason I'm in this is because I think this is, the next big trend. And if you don't have some exposure, even if you don't want to pick these companies, I think an ETF like this is really good. Because the people who create the index are actually quite clever, and there's definitely some good method behind them in the madness of how this is set up. Definitely something worth a closer look if you're in a mind to actually put a small portion of your portfolio into an ETF that can actually give you exposure to some of Australia's best up and coming technology stocks. Thanks, guys. Peace. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's Crack the Sky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your investment horizon and crack your financial sky. Thanks, guys. See you later.